The Federal Reserve decided yesterday not to cut interest rates. In my opinion, I think this was a bad decision. We're going to break down exactly what Jerome Powell said, why I believe he may be just slow out of the gate, and what does it mean for your crypto holdings going forward? And I guess the big question is, when do we finally see some rate cuts? We'll try and answer all those questions in this video. So go ahead, hit that like button and subscribe to the channel. And I also have a cheeky little pre-sale coming in this video, so you might want to check that out. But with that being said, let's get into this video. So I guess the big statement is, well, we knew they weren't really going to cut rates. I, again, though, do believe that that was a bad decision and is out of line with the rest of the world. We'll touch on that in just a minute. But basically, Jerome Powell decided to keep them as they are. It says, in support of its goals, the committee decided to maintain the target range of the federal fund rate at 4.25% to 4.5%. In considering the extent of timing of the additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risk. The reality is the big T word came up once again: tariffs, and who fundamentally is going to pay for it. In the eyes of the Fed, it has to be passed on to the consumer. I don't necessarily agree with that. We actually have seen May being a real challenge for the tariffs, but actually have a less impact on cost of goods, energy, and much, much more. He wanted to say this: in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goal. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. Obviously, all of them decided this was not a good thing. Now, there was, however, an interesting debate when Jerome Powell was talking. He actually came out and initially was very bullish and optimistic, even discussing how AI could be really positive for the federal fund rate, but then kind of dovetailed back and said tariffs are going to be a disaster, war's a disaster, and we have to be very cautious as to what they do with those rates. So, like I said, not the greatest. I guess we were all secretly hoping for a rate cut, but it didn't quite come in. But like I said, this is interesting when you start to look at the central banks and what the rest of the world does. And in fact, if you look at the most recent changes, many have actually reduced. For example, Sweden today dropping 0.25%. Russia dropped 1% a few days back. We also have countries like Denmark dropped, the ECB, the European Central Bank, dropped, as well as South Africa and many others. So lots of countries in the most recent announcement have actually lowered their interest rates, the US not wanting to jump on that bandwagon. So I guess, how does that affect your cryptocurrency holdings? Well, we actually saw some increased volatility in the market. No surprise there. The reality is people are very cautious of risk assets, Bitcoin and many others. So the reality here is, though, that the interest rate cuts will become appropriate eventually. We may get there, but the Fed will wait a few more months to make a smart decision. Many people now predicting September could come in. Employment remains acceptable, but the extent of inflation increases are not visible. Rising inflation may compel the Fed to cut rates in the third quarter as an economic slowdown may come in. And the 2025 GDP growth forecast was lowered to 1.4, signaling economic cooling. Now, this may be positive when it comes to potential risk on assets like Bitcoin. We actually saw the treasuries go up a little bit, and the 2025 inflation forecast was raised to 3% due to tariffs. So if we see people hedge against inflation, crypto may get a rally. It needs to be a bit more optimistic, though, with potential tax cuts and, more importantly, those next few segments of data, whether that be PPI, CPI, or PCE, therefore could give us some more positive move when it comes to BTC. We know that they adjusted the economic forecast. What does this mean? That cryptocurrencies are experiencing heightened volatility. The fact of the matter is, at the minute, people don't really know what's going on. GDP growth down would indicate a slowing of the economy, but at the same time, when you've got costs coming down, this could be a positive thing. The heightened volatility, investor caution, means that things like Bitcoin and Ethereum, alongside other digital assets, are subject to concerns as market participants adjust the Fed's updated forecast. Traders are likely to maintain a risk-averse approach as these economic changes unfold. So what you're going to see is people trade less, potentially even move more into stablecoins. And actually, we can see that here on the charts. Very briefly, we actually see USDC dominance and USTD dominance starting to finally wick down, but actually at the cost of the time when the Feds came in. Here was the Fed decision, which we actually saw an increase in stablecoins. People kind of panicked a little bit. That, however, did diminish on the back of that. Now, what people aren't panicking about, by the way, is Chica Token, the new pre-sale on Ethereum getting ready to launch. This already has an exchange lined up. They are looking to get a further 2 exchanges. You can purchase at least $300, grab yourself an instant airdrop, and those investors who buy $1,000 will get a chance to win over $5,000 bonus giveaway when this token does live. A brilliant meme based on the Taco Bell dog. And again, link in the description if you want to check this out. But lots of bullish news, lots of people talking about it. And like I said, already listed on CoinStore as well as many, many others. It's got a great dev team. The community's building. So if you're interested in grabbing yourself a pre-sale, you've got 7 days and a bit left. Check out chicatoken.com, link in the description. Okay, so with all that being said, with all of the economic outlook and I guess the risk on versus risk off assets, where do we currently sit right now when it comes to BTC? Well, we need to look a little bit more at the macro, and the macro being here, the weekly candles. Now, yesterday we got that red close. We'll keep an eye on what goes on in a key area of volatility right now. Now, I talked about this where I thought we'd range between these 2 yellow lines. If you take a look at the daily, for example, we are retesting this lower range to get back into this trading channel that I think we'll sit in maybe for the next 2 or 3 days as the whole Iran-Israel conflict does kind of evolve. And the big question is, does Trump get involved or not? If we see this heighten, if we potentially see the US getting involved, we could come down, test the low range of around 101,500. If not, and it all comes to a very quick close, we may start to retest the upper range of 108. So quite a significant range there, but I think it's important to understand today, in my opinion, the Fed made a bad decision. This could play out though over the course of the next 3 or 4 days and actually could turn out to be slightly more positive when it comes to risk assets. But look, let me know what you guys think in the comments down below. Don't forget to check out that Chica token if you are interested. As always, do your own research, and I will see you guys in the next video. Bye-bye.